So in this video, I'm going to walk you guys through me doing a live covered call on PayPal. But why PayPal? So you guys might remember a couple of videos ago, I did this video on the most undervalued stock in the stock market. If you haven't seen it, the link will be down below in the pinned comment. But effectively, what I talked about was the valuation of PayPal. And based on all the fundamental intrinsic value analysis, PayPal is currently undervalued by a lot. So go check out that video. Now, as a result, I was selling puts on PayPal and one of my puts got assigned at $60. So if you look at my interactive brokers platform, you can see here that currently PayPal is trading at 61.14. So I am $100 up on this position. But what I want to do is start to sell covered calls on PayPal so that I can bring in additional income while I wait for the stock to increase. Now, if the stock continues to go down, I have puts at the $55, $56, and $50 already in there to accumulate more shares. So I want to build out a position in PayPal based on my account size if the price allows me to do. But I want to continue making money while selling covered calls on PayPal. So we've got a PayPal option chain over here, and what I like to do is I like to sell options, whether it's selling puts, selling strangles, selling covered calls. I like to do it around the 60 days out, looking at the monthly cycles. So the monthly cycle for September is September the 15th, which is 21 days to go. I like to, again, look at 45 to 60 days out. So the next monthly cycle is the October cycle, which is 56 days to go. And what I like to do with these positions is, because I'm holding the shares and I'm going to sell a covered call above my cost basis, I'll probably hold these to 50-60% max profit, or around 21 days till expiration. I will look to roll the position to wherever I need to roll it to based on what happens to the share price. So with my cost basis being $60, if I sell a covered call at any point above $60, I will not only make the premium, but also the capital appreciation of the shares. Now, I'm looking at this here on October the 20th, 56 days to go. I'm looking at around the $67.50 strike price. Now, if I look at this, we can get anywhere between $116 to $117, and you can see it's quite a liquid market. It's only a penny wide in terms of the bid and the ask, which is really good, pretty good to get filled. And again, that would be a $750 gain in terms of appreciation of the shares, as well as $117 in premium. Now, the reason why I'm going this far out is because I don't really want to give up the shares. I want to keep the shares. For the best case scenario is PayPal is around $65, either near the date of expiration or around 21 days to go. And then I'll roll this up to 70 or 72.5, depending on what's happening with the stock price. So the way we do this is that once you've logged in and everything, and if you're interested in interactive brokers, links down below, you'll get some shares, I'll get some shares if you use my link. And they have a demo account feature where they give you $1 million in virtual money, and it's pretty much live market conditions. So if you really want to practice trading options and buying and selling shares, I strongly recommend interactive brokers. So what we're going to do, we are going to sell the $67.50 strike. So when we click on this, what it does, it brings up information around there. So my max return is $119 based on the current price, and max loss, theoretically, if PayPal goes to 100, all it's really doing is, because I'm covered with the shares at 60, I don't really have a max loss. There's no way I can lose on this position. The minimum I will make on this position is $117. I will make no losses because I already hold the shares. So that's kind of a falsified view, because it's assumed that you don't have shares to cover the position. It's an 80% chance of profit, meaning that at the day of expiration, there's an 80% chance that PayPal will be below $67.50 at the day of expiration, which is where I'm looking at here. Again, I could go at the $65. So if I was to select that and take that one off, For example, you can see here the probability jumps down to 73 because it's closer to the money, and I'm taking more quote unquote risk by getting $183 as a result. So if we go back here to $67.50, and again, it tells you all about the Greeks and all that kind of good stuff. So we can see here it's fairly liquid market. So if I click on order, what it does, it tells you want to sell it. We don't want to buy it. We want to sell to open this PayPal covered call at 67.50. We'll just keep it at 118. And again, we're going to go submit and sell order. I'm going to allow that. And you can see here that my order has been filled fairly instantly. So I got paid $118 into my account in cash for a stock I already own at $67.50. Now, depending on how you utilize this, you could also argue that now your break even at $60 is now at, what's that, 59.82, something like that. So therefore, the more you do covered calls and the more premium you get, you're lowering down your cost basis of your shares. But I don't really take that into account. I've got 100 shares at $60. I really want to accumulate more, really, because then I can start selling covered calls at 2 contracts, getting double the premium, and then also getting double the appreciation if and when it starts to rise. So again, I really hope you've enjoyed this quick tutorial video of how I just made $118 in the space of what I don't know how long this video is, a couple of minutes. And you can learn to do this too. Subscribe, check out my videos. I also have a mentorship or a coaching course where you can spend one-to-one time with me and learn this stuff and start building a portfolio and start changing your life effectively, like I've done trading options. And hope you've enjoyed this, and I'll see you guys in the next video.